Hello, good afternoon. You've tuned into Your Stocks coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much for tuning in as always. And it's a good afternoon that's shaping up for the market, a good day that's shaping up for the market. You can see green coming in across the screen. The Nifty, the Sensex, the Nifty Bank, mid and small cap, all of them are managing to hold on to good gains in today's trading session. At one point of time, we'd seen the Nifty even touch the 25,000 mark. Then it came back down. And why is all this happening? Today, we had the RBI's rate cut decisions, the MPC meeting decisions that came in finally, where RBI cut the repo rate by 50 basis points. Also, in terms of liquidity, the CRR cut came in by 100 points. And that is why Nifty holding on to gains of around, more than 200, 250 point uptick there. Sensex up more than 700 points. Nifty Bank also trading with strong gains in today's trading session. So we've seen a good move coming in across the board today. What is, leading the gains? We have realty that's leading the gains. We have financials that are leading the gains. Metals also among the top sectoral gainer today. So that is interesting to watch out for in today's trading session. What's not doing well? Only one sector, that's Nifty Media. But yes, not a major contributor there. So Nifty Media a bit subdued in today's trading session. That is something to watch out for. But all in all, a good day that is coming in for the markets, especially after the RBI's decision that came in this morning. But this is a show where we solve all your stock-related queries, and we're going to be doing just that in the next 20-30 minutes. We have our independent market expert Shahina Mukadam joining with us, as well as Vaishali Parekh of Prabhudas Lilladher to answer all your stock-related queries. Vaishali as well as Shahina, very good afternoon, and thank you so much for joining in with us as always. Vaishali, a quick check on the market technicals before we jump to the queries. 25,000 on the Nifty did touch that, and again it came back down. Is there still some bit of resistance that's coming in there? What are we watching out for in terms of support levels for the Nifty?
Oh, well, very good afternoon, all of you. And yes, it's quite a good day with RBI policy, and post that, we have seen a euphoric move. So I think Nifty, of course, it's still well within the range. And I would say 24,700 acts as a near-term support. And we are waiting for Nifty to cross 25,150. That would trigger us a further up move towards 25,700 levels. Whereas Bank Nifty has already done its part, it has given a good surge, and we were looking forward to our technical target of 57,000. So that's where we are nearly there. So yes, there is good participation coming from realty, from NBFCs, from the banking and metals, and now we are looking some pickup coming in pharma. So overall, it's quite a good day.
Okay, quite a good day coming in there as well. Keep an eye out on those levels also that Vaishali mentioned. On that note, ladies, let's get started with the stock-related queries for today. The first query we have is coming in from Ravi, who's writing to us from Hyderabad. He's holding 20 shares of Bajaj Finance. This is at a price of 2,615 rupees per share. Oh, it's a long-term investor in this one and wants to know whether he can book out his profits, continue to be positive on this one. What's the view? Shahina? Clearly, the viewer has had those patience to hold the stock as well. Today, 9,000. About that mark is what Bajaj Finance is trading at. Should they book out some bit of a profit? Continue to hold. What's your view?
Well, see, there is the bonus issue. That is 4:1. There is a split. So I would say you hold on, hold with a stop loss, of course, because, the stock has rallied a lot. But and then subsequent to the it going X bonus at whichever date it does, then you could look to, do some bit of tax planning as his question is, and look to book part profits because valuations, are not cheap. If you look at it on a if you look at it over a 2 to 3 year basis, you have valuations now still at about 4.5 times. Even you look at FY27 nearer term, so it is going to consolidate once you have the bonus issue out of your hand. At the same time, if you're holding for very long term, the rest of the stock, it's expected to grow. AUMs are expected to grow about 25%. Also, today's RBI policy is a positive for the overall sector, the NBFC sector, banking sector. So to that extent, book part profits post the post it going X bonus, not right away. Hold with a stop loss.
Okay, hold with the stop loss. That's the view from Shahina. But let's move on. And Vaishali, your view coming in for Bajaj Finance. Should the viewer continue to hold or maybe book some bit of a profit now?
I would say, of course, the stock has run up quite a bit. And today, post the outcome, we have seen a new round of momentum setting in. So according to me, 9,000 should be taken as an immediate support level. And I think if this momentum continues, looking at the volume, I think the stock is ready for a target of 10,000 and above. So 9,000 should be the stop loss and hold for a target of 10,000 to 10,300.
Okay, let's move on to the next query for today. This is coming in for TVS Motors. We have Rahul, who is writing to us from Mumbai. He's holding 150 shares of TVS Motors. This is at a price of 147 rupees per share, and he wants to know if he should continue to hold this one or book the profits, or can he look to add some more in terms of quantity at the present rate as well. Shahina, your view for TVS Motors in the two-wheeler side, TVS Motors, or would you look at any other player for two-wheelers?
The TVS Motors is a good stock to hold for the long term. But at the same time, there are a couple of issues. So you have to hold with a stop loss. One is that valuations are not cheap. If you look at it, price to book, it's about 16 times, and EV by EBITDA 20 times. Again, you're hearing about the raw material issues. We are hearing that China is putting certain restrictions, or we are likely to see some slowdown in terms of production because of availability of the raw materials that are required for two-wheeler, essential raw materials. So to that extent, one has to be careful, because any disappointment in earnings will see the stock either soften or consolidate for a longer period of time. In terms of competition also, competition is aggressive and is likely to continue. I think competition will be quite substantial over the next couple of quarters. So you hold as of now because it's a quality management, quality stock, good products, at the same time keep a stop loss.
Okay, keep a stop loss. Vaishali, your view coming in, right? The viewer has bought this at 147 rupees, and I think when I'm looking at it, the last time it was 147 was in somewhere around in 2014-15. So they've been holding it for a very long amount of time. Would you just say that book out some bit of a profit? They are okay to add some more as well. So it seems like they're a long-term investor already. What's your view on the technical?
Since it's a long term, I would say no harm booking partial profits if 2600 levels break, because that will let you buy the stock once again at a lower level of 2400 levels. But also, right now it is in a consolidation. There is no confirmation of any trend. It is in a positive mode. So I would say hold on. If you get a chance at 2400, 2500, add more, and the stock would gain further more strength if the stock moves about 2900, and that would give you a target of 30 to 3300. So that's how I would deal with this stock, and that would be the view from the technical eye.
Okay, that's a view there coming in from the technical front on TVS Motors. Next stock for today is Sula Vineyards. We have A. Subramanian, who's writing to us from Chennai. He's bought it at 100 shares of Sula Vineyards. Price is 643 rupees per share, making a loss on this one. Shahina, your view coming in for Sula Vineyards. It's Friday, but clearly they are not celebrating, given that they are making a loss on this one. So would you suggest some other Alcobev companies if that's the category they're looking at? And what should they do right now with Sula Vineyards now?
Well, yeah, so actually, we as consumers are going to have a lot of more choice going forward, given the fact that, India is having these new arrangements, new FTAs with UK, with Europe. We'll have it with hopefully good tariff, levels with US. So to that extent, I think wine and the competition that is there in the particular segment is going to increase, and this will put further pressure on your prices, or maybe the cost will go up. So to that extent, I would say that while the investor has made a lot of loss, it is better to switch from here. And in fact, if you want to be in the same segment, I think Radico has better opportunity going forward. Also, it has done well. If you look at numbers for Sula, were very disappointing fourth quarter. I don't see too much of improvement. So I would say switch.
Okay, switch. That's a view coming in there. And Vaishali, on the technicals, your view?
I would say, of course, this is absolutely a weak stock, and I'm not even seeing any clarity whether it's showing signs of bottoming out. So I too would agree that it should be a switch. In fact, even in the cash category, we have quite a few stocks like Associated Alcohol or United Breweries. If this is the sector that you're looking at, then I would ask for a switch and go to these stocks.
Okay, let's move on to the next query for today. This is coming in from one of those sectors which have been very hot in the last month specifically, and that is from the defense side. We have Anuj Kumar writing to us from New Delhi. He's holding 1,000 shares of Garden Reach Shipbuilders. It's at a price of 2,000 rupees per share. Wants to know the short-term view on his investments. He is making a profit on this one right now. We've seen all these defense names buzzing away in trade, China. there's a lot happening on that front as well. Should the viewer continue to hold, or maybe, now book out the profits? Again, you would get it at a lower level. What's your suggestion?
Well, he can look to part book profits. If you see the rally in the last just month or even 3 months, if you take, has been very sharp. Now it has gone up almost 150% if you see over the last 3 months. Steep rally, I would see a bit of, it is better to hold either if you're hold with a very strict stop loss, or then you can part book some profits and then hold the rest for the long term. Because in terms of valuation, it is expensive for the near term, short term query. Near term, it is expensive. Longer term, India now will get a lot more orders for shipbuilding. We are positioning ourselves in that manner, as well as defense orders are, the order book position is pretty strong. So, and also if you see fourth quarter numbers were very healthy, very strong numbers. So if you have that sort of a growth, long term, it's a hold for at least part of the quantity that is bought.
Okay. Vaishali, your view coming in for the stock as well. Garden Reach Shipbuilders, last just 6 months only we've seen 81% return, right? On the technicals, is it indicating a bit more of an upside now?
So technically, there is no exhaustion in the trend, but it is a perpendicular rise right from 1600 to 3,500 levels, and now we are at 32. Still, there is no damage to there is no sign of exhaustion, nothing. But I would say keep a stop loss of 3150, because if these levels break, then it could come into a profit booking mode and go towards perhaps 2800. So strict discipline or book partial profits.
Okay, strict discipline or book partial profits, that's a word coming in from Vaishali. So keep an eye out on Garden Reach Shipbuilders. On that note, viewers, we're going to slip into a very short break. And here's some good news coming in for our viewers. India's business news leader is now a click away. Introducing CNBC TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC TV18 app now from the Apple Store, Google Play Store, or you can just scan the QR code on your screen. Welcome back to Your Stocks on CNBC TV18. We still have with us our expert, Shahina Mukadam, as well as Vaishali Parekh, to solve all your stock-related queries. Let's move on to the next query now. We have this coming in from Rahul Khanna, who's writing to us from Pune. He's holding 18 shares of Hinasa Consumers. Price is 220 rupees per share. Wants to know the future prospect of his investments on this one. Shahina, what's your view coming in for Hinasa Consumers? Q4 numbers, that turnaround that we saw coming in, good numbers that came in, the stock had run up, after that as well, on the day of earnings, the next day as well. What's your view? What should they watch out for? And given now that, these rate cuts are coming in, how do you see this consumption story play out?
Well, valuations are pretty expensive. So, Vinny, while you have said that, numbers were good, but they were good only on terms of the top line. If you look at the EBITDA or profitability, I think they were under pressure. So, I would say that it will depend on how well they're able to manage their costs and, improve their revenues going forward. Because any disappointment now, because of the valuations being expensive, the stock will take, a bit of a hit and it will correct. So I would say you can hold, but hold with a stop loss, which is important for Hinasa.
Okay, hold with the stop loss is the view coming in on the fundamentals. Technicals, Hinasa Consumer, how is it looking like, Vaishali? Should we expect a bit more of a run-up, or is it better to just book out the profit that you're making right now?
Actually, I think it is ready for a run-up, because if you see, the stock has fallen right from 540 levels, and for a very long time, it has been consolidating at 240 levels, 220, 240. And from there on, we are seeing a good gradual upward move. So yes, currently the stock is consolidating. So 290 would act as a support. And once the stock moves about 340, I think this opens the road for targets of 400, 430. So I would say yes, continue holding, but keep 280 as a stop.
Okay. The next query for today is coming from Anil Kumar, who's writing to us from Hyderabad. He's holding 100 shares of PG Electropras. This is at a price of 811 rupees per share. He's a long-term investor and wants to know whether he should continue to hold this or look to sell, making some bit of a loss on this one right now. PG Electroplast, what's your view, Shahina? What should they be doing?
Yeah, so the numbers that we saw in the fourth quarter were very strong. In fact, they reported much better numbers than what I was expecting. And really, because they have been showing this very strong growth, both on across all parameters, turnover, EBITDA, profitability, and it's made itself a niche player in the AC manufacturing space. Valuations are a bit expensive, but at the same time, one can hold. You can hold it with a stop loss again. So I mean, that's all I can say about this, because the potential is very high, but at the same time, valuations are also a bit expensive. Company is doing very well in terms of growth. So you hold, keep a stop loss.
Hold, keep a stop loss. That's the word coming in there. FY26 had given a guidance also of growth of around 30.3% and group level revenue guidance of 33% as well as what the company has spoken about so far. Valuations are expensive is what China is highlighting, but hold is the view on the fundamentals. Technical front, PG Electroplast, what should the viewer be doing? Last 12 months, we're seeing a bit of a run-up that's surely coming for the stock, a good run-up. So now, what should they watch out for, Shine?
So of course, yes. So the long-term trend is intact, and right now it's at a make or break levels. It's currently sitting on a 200-day moving average on a daily chart at 770 levels. So keep a stop loss of 700. If this stock goes below 700, it calls for a further corrective move. And likewise, if it bounces, because this level, as I said, is a make or break, if it goes above 800, 820, this is ready to get back on track to go towards 1,000 levels.
Oh, 1,000 levels is we could watch out for, but it's that make or break level, so keep an eye out on that before you decide anything. Okay, let's move on to the next query for today. That's coming from Deepak Rupani, who is writing to us from New Delhi. 100 shares of Jio Financials is what they're holding. Price is 290 rupees per share. He's a short to medium term investor, so not a long time period in terms of holding, maybe a year or so. Shaina, your view for Jio Financial Services?
I think everything is in positive for Jio Financials and is working in its favor. Valuations, in my view, are not expensive. It's just slightly over about 1.1 time book. Secondly, I think the tie-up that they've had with Blackstone, the 50-50 joint venture, is a very positive, because mutual fund industry is growing, and both are strong in their own areas of expertise, and they can leverage each other's strengths. So I would definitely say a hold, and any declines, any softness you can add.
Okay, any decline, any softness, you can instead add. That's a view coming in as well from China. Vaishali, on the technicals, Jio Financials, what's it shaping up like now?
So yes, my view matches with Shina's because it is on a very strong uptrend. It is making a good higher bottom, higher top formation, and it's right now above all the resistances. So I would say continue holding. If a year is a holding period, then this can go towards 360 to 400 levels also.
Okay, keep an eye out on those levels over there. Hold is the view coming in on the technical and the fundamental front. But, Vaishali as well as Shaina, thank you so much for joining in with us because that was the last query for today. Hope you all have a great weekend. And viewers, thank you so much as always for sending us your queries. Keep sending the queries to us. You can see that the email ID is flashing at the top of the screens for you all. So do send us your queries and we'll solve them Monday, Wednesdays, Fridays. Thank you so much for tuning in. Up next, now we have Closing Bell to take you through the last hour of trade.